Gold is down. What else is new? I've been telling you this for weeks now that a correction in gold is coming, but that gives us a chance to take a closer look at some of my favorite gold stocks in the market that we could buy if we see a correction in the miners. One of them, Equinox Gold. This stock is risky, but it is the hottest story in the junior miner market. And if the management solves the problems, and they're absolutely solvable, boy, shareholders should be rewarded with multi-bagger returns. Let's talk about it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Okay, so first things first, as you can tell, I have the hiccups. I have the hiccups, but I wanted to do this video, so we just have to power through. Sorry about that. I don't know where that came from. Just caught up to me out of nowhere. Anyway, this is the second part of the Equinox mini analysis. Here's the link for the first part. I highly suggest you watch the first part first and then watch this part so you know what's going on, because I'm not going to rehearse all the information from the first part. We got a lot to talk about, so let's get right into it. So Equinox Gold, the new Equinox Gold, ticker symbol EQX. I am, full disclosure, long-term shareholder of this company. I also was shareholder of Calibre Mining, the other company who merged with Equinox Gold. I am, however, not compensated in any shape or form by Equinox Gold for this video. This is just my pure opinion. This is also not financial advice. Do your own research. So, merger, Calibre Mining, Equinox Gold. The stock has basically done absolutely nothing since the merger was announced in February. Since the beginning of the year, Equinox Gold has been an absolute underperformer in the gold mining market. Absolutely terrible. It's up about like 15%, which sounds fine. But when you know that gold is up about 23% for the year, and that the gold miners on average, the juniors, are up 40 to 50% on average, that's a real disappointment. And that's because this dog has some serious fleas. But that is exactly why I like this stock now. And if I wouldn't be a shareholder, I sure would be buying positions now. I might also personally add to my position in weakness. Equinox Gold really is one of the last chances left right now, after we have seen basically I would say, call it the first quarter of the new gold miner bull run. It's one of the last chances left in the junior market among the bigger producers, because if things work out, Equinox Gold in a couple of years at the latest should be able to breach the magical mark of 1,000 ounces of produced gold a year, which puts it in the senior category at the very low end, but that would be it. So right now we can get a big junior producer who's on the verge of becoming a senior producer at an absolute discount price. That's fantastic. So what's the upside? Well, this new company has 7 producing mines. They have 6 really interesting developmental projects. They have incredible gold reserves of 23 million ounces of reserves and an additional 22 million ounces of resources. Huge. They are on the path. There's a clear path to become a senior producer, meaning a production of 1 million ounces or more a year. Excellent. And really excellent now with the two portfolios combined of Calibre Mining and Equinox. Right here, this is the important part. 2/3 of the net asset value is now in North America, and institutional investors love juniors that have the majority of their mines, the big mines in North America. Those usually trade with a premium. So we can pick up Equinox Gold at a discount right now, and it might end up trading at a premium, a big one that is, because it has 2 tier 1 assets in Canada. The Valentine mine right here and the Greenstone mine. Now, the beauty of this is these are not only 2 tier 1 assets in Canada. Right now, they're also just at the start of their mine life. As you can see here, for Valentine's, first pour is supposed to happen in the third quarter 2025. guess what? That's exactly where we are at now. And Greenstone, they started their production in November 2024. Combined, at full capacity, these two mines alone should bring in around 500,000 ounces of gold a year for Equinox down the road. Plus, and this is the kicker, Equinox Gold has a true blockbuster project. This one right here, Los Filos, in Mexico. It has already 13 million ounces of reserves and resources. This is a big one. It's an elephant, it's a bonanza, whatever you want to name it, the different names that exist in the commodity sector. Los Filos has it, and this is the third joker. So we're really talking about three big projects that Equinox Gold has in their pipeline, all of them because Los Filos is in development at the beginning of their mine lives. So we're getting in at the hot growth period, right? So before we get to the risk side, if you like this content, if you like this type of information, usually without the hiccup, please subscribe to the channel. Hit the subscribe button. Takes you a second, helps us out, helps you out because you're going to get information here that you don't get anywhere else. So let's talk about the risks. Why is Equinox, with a portfolio like this, so cheap, right? Look at this. Among other juniors and bigger juniors, right, like Alamos, for example, Kinross, Northern Star, Equinox has the second highest amount of gold reserves, but it trades at large discounts. And there are really three reasons for it. The first one is that mergers rarely work. That goes for every sector, and the commodity sector is no different. So the institutional investors want to see that this merger works. And this will start to show in the fourth quarter this year. Second reason, this is a big one. The Greenstone mine in Canada, the big one, right? The one that Equinox brought in, started production in November 2024. It has production problems that also, so they're producing less gold than they originally announced and at a higher AISC all-in sustaining cost. Man, the market sure doesn't like that. Now, this is not unusual when you start a production, but it's definitely not great. And it does destroy a lot of trust. However, one of the advantages of a merger like this is that you bring in a lot of human capital, a lot of management competence. So let's not kid ourselves. The Equinox management is really strong on the financing side and dealing with the capital markets. It's not the greatest on the operational side. However, that is the strength of the Calibre management, who are excellent on the operational side. And it comes at no surprise that the new Equinox management sent down some Calibre guys to Greenstone to fix it. That is great. So the management has said that Q2 is going to be more of the same, so not as much gold production as originally announced, right? Probably still at higher all-in sustaining cost of $1,700 to $1,800, which is still leaves a very healthy margin if you think that we're trading at gold prices between $3,300 and $3,200. The management also says we should see improvements by Q4 of this year. So this will be the benchmark, right? The third reason why Equinox is so cheap is that this company carries a boatload of debt. $1.4 billion to be exact. And that's a lot for a company with a market cap of around $5 billion. However, Calibre brought in a lot of cash in the new company. If they increase their gold production in 2026, right, they can pay down the debt significantly. The market is not honoring this at all at the moment. And because of this, then we also get kind of a double positive effect where, because the debt gets paid down, right, they need to spend less money on the interest rates, and therefore their cash flow balance, their profits and everything should improve dramatically. Plus, if they start to reducing the debt by larger amounts, institutional investors will take notice, and obviously that will be then one of the big bonuses of Equinox Gold, right? The company then is big enough now, because both of them separate, Equinox, the old Equinox and the old Calibre, were too small, right? Equinox was about 3.5, and Calibre was close to $1 billion market cap. That's too small to attract institutional money. Now they're bigger, right? That opens up the door to get new institutional investors invested in Equinox. All right, and this leads us to the big joker, and that is the Los Filos project. That is the big one. So, Los Filos, legit blockbuster gold project in Mexico, which a lot of people say is a tier 1 mining location. I would call it a tier 2 now, but it's getting better with the new government. In this presentation here, the most recent one by Equinox Gold, they don't even have an individual slide for Los Filos. This is crazy, but understandable. Right now, the market also values Los Filos with literally $0 US. Why is that? Well, Equinox had trouble with 3 indigenous tribes in the area that own the land, and they negotiated with them. They cut deals with 2 of them, great, but the third one completely blocked everything, and it got so bad that Equinox shut down the project. They shut down the project, and that's what we see in the stock price right now. Equinox Gold is valued as if Los Filos is basically a project that's going to be abandoned. However, here comes the kicker. Just a few days ago, Equinox Gold announced that they're restarting the exploration in Los Filos, but only on the land of the 2 tribes that they now have agreements with that run for 20 years, so a long time. So obviously, this is excellent news that the market is not honoring at all at the moment. The market is just pretty much fed up with Los Filos and the problems that Equinox Gold had with the tribes there. However, what they're doing is they want to start a big exploration at the land of one of the tribes, 2 tribes, see if they can increase the reserves, because nobody really knows how much of the gold in the ground is on the property of the 3rd tribe that's not negotiating right now. However, since Los Filos is valued right now at $0 at the stock market, if we can just get 50%, that's a huge increase in the value of the company. Plus, here's what I think what they're doing, and it's pretty clever by the Equinox management. Again, that is their strength, right? That's the strength of the Equinox people. Everything that has to do with negotiating, financing, all these type of things. By restarting work on the land of the 2 tribes that they got an agreement with, they're putting these people at work. They're paying them salaries. Guess who's not working? The people of the 3rd tribe. They see the people from the other tribes making money that they need, because there's not much else there for jobs in this area. So this puts a lot of pressure on the decision makers of the 3rd tribe to get back to the negotiating table. And I wouldn't be surprised if Equinox Gold will be able to announce, hey, we struck an agreement with the 3rd tribe. Now Los Filos project is back on 100%. And that would definitely affect the share price. So before I come to my final conclusions, and sorry about that hiccup, man, I really apologize for that. Please subscribe to the channel if you like this information again. And if you like these kind of presentations and the way I do it, or what I could do different, let me know in the comments, because we have the chance right now to go through some gold and silver stocks, maybe some uranium stocks as well, but definitely some gold and silver mining stocks, because it looks like I was correct on my call that we're gonna keep having a correction in the gold price. Now, where does Equinox Gold, where does all of this leave us? What I like about Equinox Gold is we have 3 problems. 2 of them are big, right? Greenstone, that's big, and obviously the debt load is big. But they're all solvable. And there's a clear path how to solve them. There's no miracle involved. There are no third parties involved. Equinox has it in their own hands to solve it. If they get Greenstone back on track, perfect. Right? That will also, 2-in-1 domino effect, take care of the debt load. I don't think Equinox Gold will have any existential problems with the debt load at all. At this size, with these type of projects in the gold bull market, worst comes to worst, they can refinance. However, this is not a swing trade. This is not a super short-term trade. This is a long-term hold. It's risky, but it has multi-bagger upside because we're speaking about an advanced junior explorer that basically is on track to become a senior producer. Junior producer, what am I talking about? Advanced junior producer that's on track to become a senior producer, producing over 1 million ounces of gold a year. If the gold price keeps going up, we can already see the trajectory. And we get them right now at an insane discount. However, the investment horizon for me is the end of 2026. So it's about a 1.5 year investment. If that's too long for you, then this might not be right for you. But we will need this time. We will need this time to see if the management can turn Greenstone on 100%, right? If we can see that the merger works, or that even more important, that Wall Street sees that the merger works. Because if that is the case, then we will have capital coming into Equinox Gold very fast, especially if some of the other projects that they have in development get moved along. There are two projects, one in Brazil and one in California, I didn't even talk about right now, that they're moving along that could add another between 200,000 to 400,000 ounces of gold, but that'll be further out, probably 2028, but that's coming as well. And obviously Los Filos. Man, if they get an agreement with a third tribe, and Los Filos therefore comes back as a third super project that they have, besides Valentine and Greenstone in Canada, the valuation we see right now won't exist at all, right? That'll be a dream for the people that'll look at the share price then. But this will need time to work itself out. And therefore, I say you need to have a time horizon until the end of 2026 for us to truly judge, does this merger work? Are they reducing the debt load? Are they getting Greenstone turned on the right way? Full production capacity? ASIC costs down? Is Valentine moving along as everybody is hoping that it will? And is Los Filos coming back on? If that all happens, we got ourselves a winner.